Hi, I'm Evaldo Albuquerque, and today I want to talk to you about the US stock market. We are looking at a 4-hour chart of the S&P 500 index. This is one of the charts that I have been watching very closely in the last few days. And here's why. Last week, the S&P 500 completed an inverse head and shoulders in the 4-hour chart. As you can see here, we have the left shoulder, the head, and the right shoulder. This is a bullish technical formation. An inverse head and shoulders indicates that a downtrend is coming to an end. The downtrend that started in May is turning into an uptrend. Now let's keep in mind this is a 4-hour chart, so it's a short-term chart, so that indicates that in the short term stock market will continue to move higher. This technical formation was completed once the S&P 500 closed above the neckline, and the neckline in this case is at 1332. So once the S&P 500 closed above that level, it completed the inverse head and shoulders. So as long as the S&P 500 is trading above the level, it's likely that the S&P 500 will continue to move higher. The nice thing about the inverse head and shoulders is that you can use the distance between the top of the head to the neckline to project a minimum price target. In this case, the distance is 56 points. So if you add 56 points to the point of the breakout, the minimum price target is 1388. So you can expect the S&P 500 to rally up to 1388 based on these inverse head and shoulders. Now sometimes the inverse head and shoulders turns out to be a false, so sometimes you can get false signals, and this happens when the price dips below the neckline. So one thing that you should watch in the next few days is watch if the S&P 500 will close below 1332. If that happens, then this will turn out to be a false inverse head and shoulders. Usually when you have a false inverse head and shoulders, the price tends to move much lower. So if the S&P 500 closes below 1332 in a 4-hour chart, I would expect the S&P 500 to move much lower, possibly testing the previous low at 1268. For the currency market, this is important because if the S&P 500 continues to rally, I would expect the dollar to fall and currencies such as the Australian dollar, Mexican peso, and South African rand to rally. Because when the S&P 500 is rallying, those currencies tend to do well against the dollar. If, however, we have a false inverse head and shoulders, the S&P closes below 1332, I would expect the dollar to continue to rally across the board. So make sure you keep an eye on the S&P 500 and on this 1332 level. And that's all I have for you today. Thanks for watching.